All right, cool. So if you guys have any questions at any time, feel free to ask. But it's gonna be the intro to options class. First things I want to cover before we get into anything too technical is the ETFs, right? So just the overall understanding of the stock market, right? You guys are gonna want to understand what the ETFs are. So first things first, what is a ETF, right? So ETF is more so like let's say if I'm investing into a company such as Apple, then I'd have to buy one full share of Apple to own a piece of it, to be a stockholder of Apple, and I will own a share of Apple. But if I want to, like that's just me investing into one company individually. If I want to invest into multiple companies, think of an ETF as like a basket, right? A basket of stocks where basically, you have multiple, you have like, for example, one of the ETFs is the S&P 500. The S&P 500 is one of the ETFs that is like a basket of stocks, right? So instead of me investing into Apple individually, I invest into the S&P 500, and everything that is inside the S&P 500, I am a shareholder of, right? So the S&P 500 tracks the performance of the 500 largest companies listed on the stock market, right? The top 5 holdings on the S&P 500 are Apple, Microsoft, Google, Amazon, and Berkshire Hathaway, right? The 10-year return is 172%. So over time, like let's say if you throw $100 a month into SPY, which is the S&P 500, over 20 years, can I share this link? Yeah, most definitely. Go ahead, share the link. So let's say you invest $100 every single month into the S&P 500. Like say you're not even interested in trading or anything. This would be long-term investing into an ETF, and these ETFs are statistically proven, over time that, they scale up, right? So if you were to invest $100 a month, I don't know if you guys see my story a while back. If you invest $100 a month into the S&P 500, over the next 15 to 20 years, you'll have like 800K to like, yeah, you'll have like 800K saved up. So that is a long-term investing, right? You can never go wrong with long-term investing. But that's what an ETF is, right? It's like instead of investing into Apple itself, I can invest into SPY, and SPY already holds Apple, Microsoft, Google. So I kind of have like a access to more stocks by investing into an ETF. And there's multiple ETFs. I'm about to cover them right now, but these are the main two that I trade. All right, these are the main ETFs that I trade. QQQ is another ETF, and it holds a lot of the same stocks as SPY, like literally very, very identical. If I were to put the charts up, which I will right now to show you guys an example, you guys will see that the charts are literally almost identical, right? Or they move side by side pretty much the same. But this ETF tracks, like, holds a lot of the same companies that SPY, like Apple, Amazon, Google, Meta, but it's overall more heavily weighted on the tech stocks, right? It's like Nvidia, AMD, and it offers big rewards during bull markets and usually falls more during bear markets. That's because technology stocks, when you're in a bull run, meaning like when the stock market is going up, technology stocks rise way more during bull markets than a lot of other stocks. But when stocks are going down in a bear market, technology stocks will fall a lot harder too. So this is a little bit more aggressive, technology stock. But yeah, QQQ holds a lot of the same companies as SPY, right? If you guys have any questions on those two ETFs, I'm gonna move on to the other ETFs. But that's what an ETF is. Everyone got a clear understanding of what an ETF is? So these are some other ETFs, right? And there's a lot, right? So XLF, and where you look at these, I like using finviz.com. So this is a website called finviz.com. And I go to finviz.com and I click right here on maps. When I go to maps, it gives me an overall heat map of a lot of the stocks in the stock market, right? So here I have technology, I have communication services, consumer defensive, healthcare, energy, real estate, right? Financial, industrial. Now let me go back to the slides, right? So I can show you guys. XLF, notice how a lot of them have an X in front of them. XLF is the financial sector. So instead of being invested, American Express.
American Express.
So let's say, for example, instead of me investing into, JP Morgan Chase itself, instead of just having shares of Chase, I can invest into the ETF and I'll have access to a lot of the other banks as well, like Wells Fargo, Citigroup, Bank of America. And you guys can see right here on the heat map, financials, right? This is the financial sector. So finviz.com, it shows you everything in the financial sector. You have Visa, MasterCard, JP Morgan. As a new trader, you'll start to you'll get more familiar with the abbreviations of these. You got Bank of America, Wells Fargo, Citigroup, and so on, right? These are a lot of the main, there's Berkshire Hathaway. The bigger the box in the sector, notice how Berkshire Hathaway is bigger than, Wells Fargo. The bigger the box in that sector means that stock is more heavily weighted in that ETF. I'll explain that a little bit more into depth right now. But then we have XOE, which is the energy sector, right? Consists of oil, gas stocks. When gas prices are high, this sector will rise, like ExxonMobil, CVX. So ExxonMobil and Chevron, right? If I go back over here to energy, you guys will see these are like some of the two biggest names in the energy sector, right? There's still a couple other names over here, but those are some of the two main holdings in the energy sector. And let's go to the other ones. All right, XOI, industrial sector. So when there's a lot of demand for new buildings and constructions, this sector will rise, right? For example, CAT, if you guys have seen like those Bobcat machines or like the construction machines, the yellow machines, that is construction stock. Same thing with DE, though they hold a lot of the same machines. So whenever there's a demand for new buildings and constructions, all this has to do with the economy too. You'll learn a lot about the economy when you get into the stock market. But yeah, those are some industrial sector stocks. Yeah, Boeing, they build airplanes. LMT is like when they were talking about the Russia and Ukraine war, this was a stock that was doing really good around the time because there was a lot of, they were building missiles and tanks and so they were building a lot of that, so that was part of the industrial sector as well. In the industrial sector, there's also stocks like FedEx and UPS. Industrials is integrated freight and logistics. So all this right here, this is the industrial sector. As you guys can see, you guys can all see it on finviz.com. You got Boeing, CAT, right? So this is the whole industrial sector right here. And then you guys have the real estate sector. I don't really trade the real estate sector as much. For the most part, the main ETFs that I trade are these. I'm gonna get into all that later on, but I just want you guys to get an understanding of the stock market before I get into the trading stuff, XOI, right? XOI is a consumer cyclical sector. So when money is flowing to the economy, people tend to spend more. So stocks in this sector will rise, right? So like after COVID, everyone got their stimulus checks, everyone had EDD. So people had money, when people had money, where do they go? They go to Starbucks, they go to Nike, they go to McDonald's, right? They start spending money on Amazon. And, these are the stocks that would do well when people have money, right? And that is the consumer cyclical sector. Notice a lot of these stocks are in SPY and QQQ as well. This is Home Depot right here. And the consumer cyclical sector is around this area, right? Right here, right? Amazon, Tesla, right? Notice how big Amazon is, and the box is bigger, so that's a heavily weighted stock in that area, right? So those are stocks in that sector. XLP is a consumer staple. So like, let's say if you are building a long-term portfolio, this would be some good stocks to, instead of being all money in on technology stocks, you could always diversify your portfolio. Because what do humans always need? We always need food, right? We always need food. So consumer staples is going to be stocks such as like Walmart, right? We're gonna have it over here. Consumer defensive, that's gonna be XLP. Consumer staples, basically Walmart, Costco, Target, Coca-Cola, Pepsi. Basically a lot of Procter and Gamble, a lot of the food stocks, these are good defensive stocks. When the economy is shifting. XLV, that is another thing that humans always need, right? Health. We always got to go to the doctor. We always got to go to, CVS, Walgreens. So these are some stocks in this sector. Whenever there's an FDA approval like Moderna during COVID, some of these stocks you could pay attention to trade. But yeah, that is the healthcare sector. You guys will be able to see it over here. Where's it at? Healthcare over here, right? I think they move stuff around. But yeah, LOI, you got Johnson Johnson, MRK, ABBV. These are all the tickers. You guys will get familiar with them. But like I said, I like keeping things simple, and I stick to a lot of these stocks over here, right? Stick to SPY, QQ. These are stocks that I'm very familiar with. So, these charts, I'm kind of like, I'm really good at trading these individual tickers. So these are the stocks that I will trade. But, if you guys are looking to long-term invest, these are some ETFs you guys could like diversify into, right? So now you guys, anyone have any questions on ETFs? Does anyone have like a good understanding of it? Move on to the next
She's like,
slide.
she's a supervisor. I can't say too much shit like that.
So, the next thing you guys are going to want to know is what what charting platform do I use, right? I use TradingView. You guys literally just go to Google and type in tradingview.com. It's $30 a month for the pro version. You can use free charting platforms such as Thinkorswim, but TradingView is a lot cleaner, and this is what it is, right? Once you go to tradingview.com, this is what it'll look like. And I'll show you guys like how to maneuver around this, right? For example, how can which ETF Amazon, so like what ETF, how can I find out what ETF Amazon belongs to? So kind of like how I was saying now, you go here to finviz.com. See, Amazon is in the consumer cyclical sector. If I go back over here, consumer cyclical is XLY, right? So that is the ETF it'll land in. But notice how SPY and QQQ also hold Amazon, right? And these are, the S&P 500 is the top 500 companies in the stock market. So, if you invest into SPY, you automatically have access to Amazon. But, right, that's the trading platform that I use. This is how you would maneuver around it, right? So this is what it'll look like when you get on here. Right here, this is where you would type in the ticker name, right? So let's say, for example, I'm typing in SPY, and here we have the SPY chart. I'm gonna cover what candles is in a bit. But right here, you're going to be able to see, the price of SPY. You guys are going to be able to see all this right here. This is where you do your drawings, like trend lines. I'll cover all this in a little bit, right? Up here, you're going to have time frames. I'll cover this in a little bit as well. Every time frame is different. So I'm gonna get into that a little bit. This is where you add indicators. For the most part, the main things you guys are going to want to know as new traders, right? This is the intro to options class. So you guys are going to want to create a new list up here, right? Create a new list and go to finviz.com, right? And start making a list. Let's say, for example, I'm going to just do intro to options here. I'm going to save a new list and I'll go here to the plus sign and I'll start adding names right here. For example, I got SPY here. What are the other ETFs? QQQ. Those are some main stocks I don't want to know, Amazon.
I'm going to talk to them about them.
Amazon, right? You got Apple. And just start making a watch list, right? You got Apple, you got Tesla. And you guys just get familiar with a lot of the main stocks, right? Microsoft. Notice how, once you guys get familiar with the abbreviations, you guys will get a Meta. So I just start making a watch list, start creating them, start looking around some of these stocks. You guys will get more and more familiar with them as time goes on. But that's basically how you maneuver around this trading platform, right? It's called TradingView. And this is what I use to look at charts, basically. So what are the green, blue flags next to the tickers? So let's say, for example, I could remove all those. Let's say I just want to have like technology stocks. So let's say, for example, let's add NVIDIA. It's for your own preference, really. So say I want NVIDIA and AMD. I'll just highlight them green just to know that they're technology stocks. I could have the ETFs in purple, for example, just to separate. It's really just for your own preference, But yeah, I'll cover a little bit more into some of this stuff as we go along the slides. But the next thing you guys are going to do, that's the first step. That's the first step, getting familiar with the trading platform. It's called tradingview.com. and it's completely free for now. But you know, once you do get, you know, once you want to start adding indicators to your charts or start adding more things, it's $30 a month. But once you get really good at, you know, once you get a lot better at trading, you make $30 in a trade pretty easy, you know. So for the most part, this is the next thing you guys are gonna want to know. Like, where do I trade on, right? That is the TradingView was a trading platform. Where you trade on now is, you know, there's multiple brokers you can use, such as Webull, Interactive Brokers, Robinhood, Tastyworks. My personal favorite is Thinkorswim, and it's gonna be this one right here. You can make an account with TD Ameritrade and use the same login for Thinkorswim. So they're both under the same, you know, they're both under TD Ameritrade. So you make the account with TD Ameritrade, but you trade on their app, right? Which is Thinkorswim. So first things first, you would go to TD Ameritrade. And here you would go here to TD Ameritrade over here. And you know, you go to open a new account. Once you go to open a new account, you go here to individual. And you open an individual account. You put in all your information. Once you get to the end, you guys are gonna have, you know, you guys will have your account, right? You guys will be able to, do you remember your login? The login for this account, you guys are gonna download Thinkorswim on your phone, right? And that is the app you're gonna trade on. Basically, I'll cover how the app looks right now. So once you're on, right, this is the step I was showing you guys. I recommend doing it on the desktop instead of mobile, but right, this is what I was showing you guys, right? You open a new account, individual, put in all your information in. And once you guys are make the account, this is an important piece right here, right? Once you guys make the account on the desktop version, this is what it's gonna look like. So you're gonna have where it says my profile right here. Once you guys make the account, once you guys go to my profile, you guys are gonna go here to general. Once you guys go to general, it's gonna come to this screen right here. And notice where it says options trading, right? Where it says options trading, it says this standard cash. That's where you guys are gonna click apply for upgrade. It's gonna ask you guys for some additional information. Once you guys put in that information, you guys will be on a cash account. The reason you guys are gonna do that is so you guys can trade with your own money, right? Because if you don't do that, you're gonna be on a margin account and the PDT rule will be in effect. The PDT rule is the pattern day trade rule. So if you don't have $25,000 into your account, then you can only take a limited amount of trades per, sounds good, Armando. But yeah, you can only take a certain amount of trades per week, right? And if you want to take multiple, if you want to, you know, get in and out of trades, you want to be on a cash account. So that's the next step you would go to, right? Apply for upgrade, and you'll be on a cash account. So that's how you would set up your trading platform and your trading broker, right? So the next thing you guys are gonna want to know, all right, so what are options? What is options? Options trading is the trading of instruments that give you the right to buy or sell a specific security on a specific date at a specific price. An option is a contract that's linked to an underlying asset, a stock, or another security. So for like in simpler terms, you know, instead of buying shares of a stock, you get assigned a contract of 100 shares, but for a much cheaper price. So it's like a contract that they give you, and you know, it's a much cheaper price. Instead of actually buying 100 shares, you know, that would be pretty expensive if you're buying 100 shares of Apple, right? But it's just at a much cheaper price, a contract, and you know, you have an expiration date to sell them. So you're basically setting a strike price you think the stock is going to go to, right? And if it goes in the direction you said it will go to, the contract you bought will start to increase in value, right? You know, it'll start to flip for more than what you bought it for. Anyone have any questions on this piece? Make sure to ask. But yeah, it's like, you know, you just get you have a contract, you're assigned a contract of 100 shares of a stock for a much cheaper price, but you have an expiration date, you know, and your stock, you want the stock to go in your direction before that expiration date. And, you know, when it goes in your direction, that's when you flip your contract for more. So that's questions on that. I'll move on to the next slide. So this is, you know, basic terminology you guys are going to want to know, like what is a call, what is a put? A call is an option to buy assets at an agreed price on or before a particular date. You know, in much simpler terms, betting that the price is going to go up. This is the terminology bullish. When people say bullish, you know, they're they have, they're bullish on a stock. They're optimistic about a stock going up. When they say bearish, they're optimistic on a stock going down, right? And there's a lot of ways to that the technical analysis is what's going to help you guys identify like whether you should buy calls or whether you should buy puts, is a stock going up or is a stock going down. I explain that. I'll cover that a little bit right now, but that is the difference between a call and a put. And there's 3 different trading styles, right? If anyone has any questions, feel free to ask, So there's three different trading styles: scalping, day trading, and swing trading. So some of you guys ask me like, why is my username on Instagram Young Scalper? It's because that's my favorite trading style, right? Maybe when I was younger too, but that's my favorite trading style, right? Scalping is when you're in and out of a trade in less than 5 minutes, right? Like 5 to 10, maximum 10 minutes, right? You're in and out, you're flipping your contracts quick. When you're scalping, you're taking advantage of quick moves in the market. It's my personal favorite way of trading. I like trading higher time frames and day trading too. So I'm kind of like a scalper and a day trader. Day trading is when you hold the position throughout the day, right? So typically for a few hours, but you're buying and selling the same day. The stock market is open from 6:30 in the morning to 1 p.m. So you have all day to, buy and sell that, but you could hold that position for the whole day, right? Yeah, I personally like scalping a lot. And swing trading is when you hold the position overnight into the next day, right? You can swing for weeks, months, even years if you buy enough time. So like when you buy the contract, remember I said a contract has an expiration date. So you can buy an expiration date up to 2025, right? If you think a stock, if you guys think Tesla's going to go up in 2025, you guys could buy, it's called leaps, right? They're a little bit more expensive. The more time you buy on a contract, the more expensive they're going to be. But, because you guys are paying for time. When scalping, what do you look for on the charts? I'll go over that right now, right? But swing trading can be risky sometimes because, if any news comes out at nighttime and you're holding that position overnight and the stock drops overnight, that could mess up your position. But there's certain strategies you guys could use for swing trading too. If you guys, swing trading takes a little bit more time to get into, so that is a little bit over time. You guys will get better at swing trading. For the most part, I like looking at higher time frames for swing trading, smaller time frames for scalping and day trading, right? So right now I'm gonna cover how to maneuver. So once you guys download Thinkorswim, I'm gonna show you guys how to maneuver around Thinkorswim. So once you guys download the Thinkorswim app, I'm gonna show you guys how to get in and out of trades. And after I show you guys that part, I'm gonna go back to the trading view chart and I'm gonna start showing you guys some examples, okay? So I always tell my mentees, you want to get very familiar with your broker because it's like a controller, right? Once you know how to move around with the controller, you'll be in and out of trades a lot smoother. It is a skill to get filled at really good prices. So I'll show you guys around the broker right now, right? So this is what it's gonna look like. After you guys download Thinkorswim on your phone and you guys log into that account that you guys made, this is what it's gonna look like, right? So notice how it says no positions. This is as soon as you open your phone and you open the app, this is what it'll look like. You guys have a button right here where it says positions, watch list, overview, trade. Overview is going to show you how much money you have in your account. Watch list is the watch list of stocks you have. And the button you guys are going to want to click when you guys are ready to buy a contract is right here to trade. Once you guys click trade, this screen is going to pop up. And that's where you type in the ticker you want to trade, right? So for example, I have recently viewed SPY. And this is a mistake a lot of new traders make, right? We're trading options, right? I don't want to click on SPY because if I click SPY, it's going to take me to a screen to buy shares, which is the full price of the whole stock. But since I'm trading options, I'm going to click the option chain, right? So that is what I'm going to click, option chain, instead of clicking SPY. So once you click the options chain, this is what's going to pop up, right? The contracts that I was telling you guys about right now. So this is the screen that is going to pop up over here. Once you guys click options chain. So now we're on the SPY options chain. And notice how on the options chain, you have over here calls, puts, and you have a list of contract dates. So these contract dates or the dates that you guys are basically, you guys can choose what date you guys think the stock. So this is the stock price it's currently at. Stock at the time I made the screenshot was around 396. We're now like around 448. But around this time we were at 396 around February, March. But you guys can choose, the more time you have, the safer it'll be, right? The less time you have, the more risky it'll be. So always go out like at least 5 days out, or maybe even 2 weeks out on contracts, especially as a new trader. You don't want to be trading contracts that expire very quickly, because if you're wrong and those contracts expire and it doesn't hit your strike price, then that's when you lose money, right? Because you said that it was going to go to this price by this date and it didn't, right? Or it's not moving at all. And so that contract will expire worthless. These contracts, when that expiration date hits, those contracts are worthless. So that's why I always like to have time on my side. And I want to have time on my side. That way I can, feel more, just have more time on the trade, right? Without having to worry about it expiring worthless on me. And you could sell whenever you guys want, So if I have a contract for November, I don't have to sell it. It doesn't mean I have to sell it till November. I could sell it today. I could buy it and sell it today, right? And I just have more time and I'm a lot safer on the trade. So that is what it's going to look like, right? This is a contract. Let's see if I have an example. Let me go to the next slide. So let's say, for example, once I click on a date, let's say I click on one of these, for example. Cool. Let's say I clicked on one, and once I click on an expiration date, this is what'll pop up, right? The prices you think does anyone have any questions? So this is what it'll look like, right? You have your strike price in the middle. This is the price you think the stock will go to. So what did we say SPY was at? 396, right? So let's say I think SPY is going to 399. And over here, you're going to have a bid and you're going to have ask. So let's say I think it's going up, right? Calls were going up. So I'm going to look at the 399 call. Calls are on the left side, right? The 399 is down here. And this is what the contract is going to cost you. So remember, you're getting assigned 100 shares. But if you want to buy 100 shares of SPY, that costs $396, right? So 396 times 100 is going to be like $300,000, right? So that's what the option is. You're getting assigned 100 shares at a much cheaper price. So instead of paying, actually buying 100 shares, you're getting assigned the contract for a much cheaper price. And this is what it'll cost, right? It doesn't mean, so it's a 399 call. It doesn't mean 71 cents. See, which is 0.71. This will mean $71. And then this is the bid, what people are trying to bid for. That's the cheapest you could potentially get it for, but you won't always be guaranteed to get it at that price. So I always click ask. Always click the ask price, and you can always edit from there. I'll explain what I mean by that right now. But you guys want to click the ask price. Let's say I am looking at the 399 call, and it costs $71. So once I click on that's what it's gonna look like. Once you click on that, the $71, it will take you to this slide, right? So for example, right, February 27, 399 call, and I'm buying it for $71. The quantity of amount of contracts you want to buy, you can buy multiple contracts, right? But in this case, for example, I'm only buying one. So I'm buying one contract for $71, and this is the screen that pops up. You click here, review. And once you click review, you send it. And now you're inside of that trade. So now you're inside of the February 27, 399 call for $71. The most you could lose is $71. Of course, with proper risk management, you don't want to lose the whole $71, right? That's where proper risk management and your technical analysis comes in, right? There you want to have an entry and a stop loss in every trade, right? I'll go into that a little bit right now. But is it okay to just use market buy, sell, and options? Please. Instead of limit? Yeah, okay. I get the question now. So yeah, right here where it says limit, if you guys click to the left, it'll take you to it'll say market. So the difference between limit and market is going to get you filled 100%, right? Limit might not get you filled if because you're buying at the market price. If the market price is $71, you're going to get filled at $71. Let's say the limit price is set like how I showed you guys the 70, the bid was 70. If you guys were to change this number to 70, because you guys are trying to bid for the contract to get it cheaper, It's not 100% that you'll get filled, but sometimes you will. That's why I said like maneuvering around the broker. It's a skill to get filled at these cheaper prices. Um, I like to buy the dips. So sometimes when I like buying stocks when they're coming down. So therefore I could get filled at limit. But if you're trying to buy at limit as the stock is going up, the price is going to keep increasing on you. So if you're trying to bid for the price that's continuously going up, you might not always get filled at limit. But yeah, after you get filled on that, this is what it's going to look like again, right? You go to positions and it'll pop up right here. So right now on this example, it doesn't show, but once you buy that 399 call, it'll show up right here in positions, and it'll show you how much you're up or down on that position. Like I said, this example doesn't show it, but there's going to be a little square like this, right? And it's going to say 399 call. To get out of the trade, you just click on that square and it's going to say close selected. So once you guys click close selected, it's going to take you over here, right? And the same thing, right? That 399 call, and now it's worth $106. So what you bought for $71 is now worth $106, right? So now you could sell it for that $30 difference and you profit off of it. So the same way, instead of see how it's red now, it's on the sell side. Now you click review and you sell it for $106. And now you made that $30 difference. It'll show right here on your P&L. For the most part, one thing that I want you guys to do too, if you guys are new traders, you guys are going to go to here to more, click more, or you guys go right here to all accounts and then start paper trading, right? Paper trading is with fake money. So if you guys want to know how someone's faking their gains on Instagram, if this is green, this little thing down here, then it's real money, right? Then they're showing that they actually made that for real, If it's orange, they're faking their gains. But so you guys are gonna want to have it on orange though, because if you guys are new traders, then you guys want to start practicing getting in and out of trades before you guys actually start throwing real money in, just so you guys get the hang of the broker and so on, right? So you guys can go to more and go to start paper trading, start practicing, start learning how to read the charts very well. And yeah, that is an intro to the trading platform and how to get started overall, right? But I'm gonna cover some more basics, right? Because if I start going deep into these charts, if some of you guys are fairly new, you guys are gonna get lost. So let me cover the first things you guys need to know about these charts, right? So I'm gonna go back to SPY. And you guys are gonna want to know what these candlesticks are in the first place, right? So I'm gonna explain what a candlestick is. Right here. Okay, so notice think of a candlestick as like a tug of war, right? So there's people on this side tugging the price up, and there's people on this side tugging the price down. And this is the body of the candle, right? So let's say, for example, right here where it says open, this is where the stock price opened up. So every candlestick, I'm gonna go back to the chart, right? Every candlestick is different on multiple time frames. So right now I'm on the daily chart, right? So this means that this candlestick was today's price action, was today's buyers and sellers trying to take the price higher and lower, right? So today was a neutral day, right? They pushed it up, they pushed it down, but they closed it in the middle. Like for example, this day, the buyers were really strong and they pushed it all the way up, right? So that's what I'll go back over here. Think of it as that, right? So the higher it opens here and it closes here. But they try to push it, for example, they push it all the way down here, but the buyers come all the way back and they push it up here. So that is the lowest the price went that day, and this is the highest the price went that day. But overall, they closed it right here. So this is kind of like, it just tells you where the price went that day, right? This is the lowest they brought it to, this is the highest, and this is a bearish candle, right? So this is the highest they brought it to, the lowest they brought it to. The price opened up right here, but they pulled it down and closed the price lower here, right? For example, this is one of my favorite candlestick patterns. This is a bullish hammer. Literally one of my favorite candlestick patterns. This is a really bullish candle because what does this tell me? That the sellers tried to push it down, right? The wick, this is the wick of the candle. They tried to push it down, but what did the buyers do? They picked it all the way back up and they closed it up here. So the buyers completely just tugged the price up, right? And that is one of my favorite candlesticks to trade off of. because it shows that the buyers show their strength. Same thing with the one of these, right? The bearish hammer, right? And you guys could take a picture. You literally just go to Google, type in candlestick patterns, and get very familiar with a lot of these. The hammers, like these are gonna be like your cheat. This is gonna be a cheat sheet, right? This is a really good cheat sheet as well. There's so many chart patterns that it's gonna be hard for me to cover a lot of these. But that's a lot of the basic one. That's what a candlestick basically is, right? So when you start reading the charts, that is how you're gonna look at these candlesticks, right? So if I'm on the daily chart, this is the candlestick for today. If I go to the weekly chart, each candlestick is gonna be 1 week. So see how it looks a little bit different now, right? This candlestick is 1 full week worth of buying and selling, and it's gonna close on Friday. This was last week, the week before, the week before, the week before, and so on, right? And then I start going down to smaller time frames like the 4 hour, and then I go down to the 1 hour, right? And you guys will see each candlestick is 1 hour. Whatever time frame I'm on, you guys are gonna see a bunch more right now. Once I'm on a 5-minute time frame, right? On the 5-minute time frame, each candlestick represents 5 minutes. So this is the actual time frame that I'm actually trading on. I do my overall analysis on the bigger time frames to mark down my key levels, right? I'm going to explain how to draw support and resistance levels right now, but I do it on the higher time frames. But when I'm actually trading, I chart everything on the higher time frame. When I'm actually trading, I'm going to see those drawings on the smaller time frame, like the 5-minute. And like I said, the stock market opens at 6:30 in the morning and it closes at 1 p.m., right? So you guys are on the 5-minute time frame, you guys are going to see like this brown orange screen, and you guys are going to see this blue screen, right? In the middle, it's going to be black. So what this brown screen is pre-market. So this is before the stock market opens. As an options trader, you cannot trade pre-market and you cannot trade aftermarket. So this is when the stock market is closed. This is before the stock market is open. See the time, it says 6 in the morning, 5 in the morning. Only like institutions can trade around this time. People with big money, right? Those are the people that could really trade the opening. If you trade futures, you could trade the pre-market. And once the stock market opens right here at 6:30, this is the first candle that the stock market opens at. And then you guys are able to see, right? You guys are able to see the price action until the stock market closes at 1 p.m., right? So this is one full trading day. This was the day before. This was the day before, right? It'll say right here, Monday, Tuesday, this was Wednesday, so on, right? Tomorrow there's going to be another orange screen and so on, right? But those are the time frames that I look at. That way, and to add that, if you guys are on TradingView, you guys are probably not going to be able to see that yet. So what you guys are going to want to do, you guys are going to right click, whether you're on a laptop or a mouse, right click, you guys are going to go to settings. Once you guys are on settings, it's going to say right here, session. So notice how if I go to regular trading, it disappears, right? So I'm going to want to go to extended trading hours and it pops back up, right? And whatever time zone you're in, I'm in LA. So I have LA time zone. And there it is, right? Pre-market and aftermarket data. Pre-market and aftermarket data is very important. You want to have a good look at these levels, right? Because sometimes the pre-market levels, I take a lot of my trades based off of pre-market levels. But next thing I want to get into was drawing support and resistance. So what is support and resistance, right? Think of it like this, right? Let's say the support is the floor. The support is the floor and the resistance is the roof. Let's say I have a baseball, right? Let's say I have a baseball and I throw it to the roof. This is just like this probably wouldn't actually happen in real life, but let's just for the example, right? Let's say I throw the baseball to the roof and I throw it very soft. It's gonna come right back down to the floor, right? So same thing with the stock price. If let's say, for example, this was the roof up here. I draw a line at my resistance, right? This was the roof. I throw the ball up and I don't throw it very hard, so it falls back down to the floor. So I'm trying to look for the floor now. And I can see there's a floor right here, right? There's a support right here. Because what happens off the floor, it comes back up, right? So let me find much clearer examples. But let's say I throw that. Okay, let's say, for example, this was a clear one back over here, I believe. Right here, yeah. Okay, cool. So notice this 430 level, right? Notice how at this 430 level, this is a roof, because what happens here? Every time we come up here, the price drops. Every time we come up here, the price drops, right? That's a big resistance level that the price cannot get above. Notice how over here, we try to get above it, it starts to drop, not as aggressively, and then we break the roof, right? We break the roof and we go to the next level, the resistance. We break the resistance and we go to the next resistance. So I look for the next resistance where there's, a major reaction, and I see it's like up here, right? So that's like where we're headed to. That's where we headed to before we have the next big reaction, right? And notice how that roof, that 430 level resistance, came back and retested as support. The roof, the resistance turned to support. Let me find some better examples just so I don't. But is that kind of clear so far? I know it's going to take support and resistance is probably like the fundamentals, is the foundation. You guys will, the more you guys chart. So like I'm on the 4-hour time frame now. It's probably going to look a little bit more clear. Notice this level right here. Okay. That's that 430 level I was talking about basically. Notice how we failed to get above it. We failed to get above it. But once we break above it, right, we come back and use it as support and we go up from it, right? And find some better examples. Like for example, this is a good example of support. Notice how every time we come to this level, this 426 level, it gets held as a support level, right? We come down and it gets supported, comes down and it gets supported. So I like to, how can you trade just based off of support and resistance levels? Well, first things first, you guys are going to want to identify, in order to have a resistance or support level, you want at least 2 to 3 touches, right? So for example, I know this is a support because we came down here more than twice. Look how we came down here once and we came down here twice and it held up, right? Came to the floor and it held up. This came to the roof, right? The resistance, and it failed to go higher, failed to go higher. So now, how would I take trades off of this? I would wait for a break and retest of that level. So break and retest is a strategy that is great for beginners, right? Because it's simple. You don't need any indicators. You don't need any indicators at all. You just need to wait. You just need to identify your resistance level. You need to identify your support level and wait for it to break and retest. So what I mean by break and retest is because sometimes it'll break, but then it'll fail and come back down, right? 80% of breakouts fail. So as a new trader, it's important to know that. So that's why I personally always wait for a retest. I make sure it breaks and then it comes back to retest, right? So notice how we got a retest here, and then I make my entry off the retest to catch that move back up, right? So that's how you would take trades off support and resistance, right? Just to keep things very, very simple. There's multiple strategies. For example, I'm gonna find another level of support that's very, very clear here. Okay, see it? 404. And look how many times this level touches, right? Notice how I have one touch here, one touch over here. Notice how we have another touch over here. The more times this level touches, notice how it's resistance back over here, support over here, support over here. The more times the level touches, the more confident I am in it being a key level. For example, let's find another one, right? Look at this level right here. Notice how every time we come to this level, how much times we touch this level back over here. All this, right? That's a big resistance level. Notice how, okay, this is a perfect example. Notice that's 416. It's basically like 417 right here. This level I just drew out right here. Resistance. Every time we come to it, what happens? We come down from it, right? Every time we come to it, we come down, we drop. And notice how we come to it over here and we drop again. Notice how we break above it here and it holds it as support now. So this is a good confirmation, right? That's a break and retest. We broke that 417 resistance, came back, used it as support, and we get a move up to the next resistance level, right? The market moves like in a staircase from zone to zone, from level to level. So identifying your levels is the foundation of, identifying your levels is the foundation of trading, right? Or just getting your charting Shit looks better. Yeah, identifying your levels is very important. That's like the foundation, right? Does anyone have any questions on or anything on support and resistance? I'll keep finding examples to sharpen you guys up, right? I'm gonna delete all these levels. But do you guys see how the more touches they have? I'm gonna go to no chart. It's starting to there. Okay, cool. That's much better. For example, on the weekly time frame, the all-time high is always the easiest resistance to find. The highest SPY ever went was 480, right? And look what happened off of it. It got resisted and we didn't go higher from there. So that's a very, very clear resistance. Look at this resistance right here, this 461. We try to go above more confluence, the better. Correct, yeah. You know, the more touches a level has, the better it is, right? So notice that 462 level, you know, we come up to it and it gets rejected all the way down to here. Notice this 380 level. And I like using the weekly time frame because you guys are going to see the levels much clearer, and then you guys can work your way down to smaller time frames. So this is what top-down analysis is. You guys start from a higher time frame like the weekly, and you break it down to the daily, the 4-hour, and eventually you guys are going to see the same levels you drew out on the higher time frames. They're going to stay the same on the smaller time frames. So notice this level right here, kind of like that 430. This is more of a zone, right? This is a really, really key level. Notice how when we're above it, it uses it as support. When it breaks back below it, it uses it as resistance. Notice how now we broke above it and it's using it as support again. So now that we're above this level of support, the next resistance that we really have room to is right here, like this 450 level. Notice how we have a wick right here, right? Look how many touches this 450 level has. 1. Right, I'm gonna draw it out. What's 1? That's 2, right? And if I go to a smaller time frame, right now I'm on the weekly. I'm gonna show you guys how that 450 level has even more touches, right? Now I'm on a 4-hour time frame just to get a breakdown so you guys can see it a little bit more clear, right? That 450 level. Now we have 1 touch, 2 touches, 3, right? 4, 5, 6, 7, 8, multiple touches off of 450. So I know that's a resistance level. And that's the price that's where we're headed to. That is the closest level of, for example, just recently we broke a level of resistance right here at 444. I've been keeping this level on watch and we just broke out today. So notice how this 444 level was resistance, because when we get to it, what happens? It fails to go higher, it drops. We come up to it, it fails to go higher, it drops. What happens today? We break above it. So what do we do on a breakout? We wait for a retest. This could be a trade that could potentially happen tomorrow. Kind of happened today a little bit, right? It came, right? Tried to retest it. Didn't retest it perfectly. But you go back to it, right? Right, so tomorrow it could come and retest this level. We'll use it as support. And I'll just have a stop loss right below that level. And where's the next resistance? 450, right? So I could catch and move from 444 up to like 450 with the stop loss right below that level. Do you use any indicators with key level little time frame? Do you use any indicator with key levels little time frame? Yeah, so let's say for example, I'm on let's say for example that 444 level, and let's say I'm on a 5-minute time frame. And I have an indicator there. Let's say, for example, the 200 moving average is at that 444 level. That's extra confluence. You know, the more confluence I have at a key level, the more confidence I have in taking a bounce or, you know, taking some calls off of that key level. So other than support and resistance, do you pay attention or apply any other techniques? Yes, I do. I use a lot of techniques, but this is like an intro to like for beginners. But let's say, for example, if you guys want, I'll show you guys the indicators that I do use, and I'll kind of cover a little bit into them. I just wanted to cover support and resistance because that's the foundation, right? Candlesticks, support and resistance is the basic foundation that you guys need to get really, really good with before jumping into like a bunch of strategies, right? But let's say, for example, one of the strategies, or let's say, for example, the indicators I use, right? So things that I would implement into that is I like to use the 9 EMA a lot. It's so right here when you guys go to indicators, you would type in moving average exponential, and it's gonna pop up right here, right? And I'd edit it. Keep mines in green, sort of 9 EMA in green. So what this basically is it follows the 9 previous candles. So moving averages are exactly what it says in the name. They move with the price, right? You know, you could average into the pullbacks as long as it's holding a clean trend. So let me find a day that there's a very, very clean trend. For example, right here, right? Look when there's a very, very clean trend, the 9 EMA holds up, right? And notice how we get a pullback into that 9 EMA. Those are the areas that I like to buy off of, right? So you get a pullback up into it and we get a next move up. Same thing to the downside. We break below it and we're trending down. We get a pullback to the 9 EMA and we get a push back down, pull back to the 9 EMA and we hold it, right? So if there's a very, very clean trend, this is one of my favorite strategies to use, but not every day there's a clean trend, right? So you have to implement different strategies off of different key levels. But this is like a strategy that I would use a lot. Like for example, this day, notice how the 9 EMA is useless because it just stayed in between candlesticks. When indicators are stuck in between candles, this is like a sideways action day. And if there's no trend, then you can't really average into anything, right? Right here, I could average into the trend. I just buy off the 9, buy off the 9, move with the trend, right? Sell, buy puts off the 9, buy puts off the 9. This is a clean trend, right? This is sideways. Notice the difference of candles. And look at the size of these candles compared to the size of these little candles, right? You guys want to stay away from choppy sideways price action like this and focus on days that are really, really giving you opportunity, right? That is one of the basic, you know, for the most part, it gets very technical. You guys can get very, very technical with it. Another indicator I use is the VWAP, volume weighted average price. It's gonna look like that, all crazy, but you guys go here to settings. And you guys get rid of the upper band, the lower band, and the bands fill. So that way it's just one line. I always keep it as a cross just to keep it, just so I can see the difference, right? And what this, the VWAP is like, think of it as a magnet, right? I kind of don't want to get too deep into this because I don't want to confuse you guys. I just want you guys to understand the complete basics, right? But a VWAP is like, think of it as a magnet. When the price is above it, the price tends to be bullish. And when the price is below it, the price tends to be bearish, right? And whenever something gets overextended to the upside, it pulls back to that middle level. And the VWAP is like that middle level. So sometimes when I'm taking a reject or if I'm buying puts, like say I bought puts up here, right? I like to target that middle level. So that is like a target that I like to use. And let's say if I'm buying calls down here, I like to target that middle level, the VWAP, because that's where the price will typically push up to, right? Yeah, that's how I would kind of use the VWAP. But for the most part, as beginners, you guys are going to want to get a really good understanding of key levels, support and resistance, and identifying trends, right? You guys are going to want to learn how to identify trends. That's also very, very important. So how do you identify a trend? So let me get rid of these indicators. And the volume. Volume is very important too. So I always have volume on my chart so I could see how strong, like kind of like the baseball example that I use right now, right? If I throw a baseball to the roof, very, very soft, that is the volume being low. But if I throw it very, very strong and it breaks the roof, it'll go to the next roof. So that's when the volume is high, right? If that's like me throwing it with strength. That is like the buyers pushing with strength to break to that next level, right? So that's how I kind of like to think of it. But to identify trends, I'm gonna go to a higher time frame like the weekly, and I'm gonna explain something real quick, right? This is the weekly chart. So notice how the SPY chart since, you know, to look at 2000, right? 2000 to 2001. SPY was literally like at $70. It's crazy, right? Imagine you're investing at this time. But right, this was the .com bubble, right? This was a huge bear market. And this bear market lasted a really long time, from 2000 all the way to 2003. And then we have over here the recession. So this is one of the longest bear markets because usually bear markets recover a little bit quicker than that. This one lasted like 3 years. This one was the 2008 recession, you know, the housing crisis. And you guys can see from 2008, but it recovered in 2009. Notice how it starts to recover in 2009. and we go on a bull run from there, right? Stocks recover and we go on a bull run, right? And then over here in 2018, we had a slight sell-off here. And then this was COVID, right? 2020, notice how we get a huge sell-off. But this was only like, I'm on the weekly chart, so every candlestick is a week, right? 1, 2, 3, 4. In 4 weeks, 5 weeks, the market already started to recover from COVID, right? And it just bounced back to the upside. And we went on a whole nother bull run, right? And then here we are again in 2021, after like they printed so much money, the government printed so much money, everybody had stimulus checks, everybody was spending. But what that caused was inflation, and inflation was so high that the interest rates and started going up. You know, they had to raise interest rates, and when they raise interest rates, that's a whole nother lesson. But you know, that caused this temporary bear market, right, from 2022 to 2023, basically, right? We're already recovering. We're already almost, you know, we're already breaking some of these levels, headed back to the all-time high, right? So how do you identify trends? I covered that, so I could show you guys how to identify trends, right? So notice how here in an uptrend from 2020 to here, right? This is what the trend lines are for. I like to identify. Same things with trend lines. You want to have at least 2 to 3 touches, kind of like support and resistance, so I'd be able to identify a trend. So I went from COVID lows to like these touches up here, and you guys could see, you could even go from like here. You guys will be able to see that, right? We're on an uptrend. What are we creating? So I'm gonna go here. Uptrend on a stock chart, and I'll show you guys what is inside of these uptrends, right? It is, all right, I'm gonna just type in higher highs, higher lows. Boom. This is a really good picture. Actually, not this one. This one, right? So when you're on an uptrend, notice how we have the trend lines, right? An uptrend consists of higher lows and higher highs. That is how you identify an uptrend. And notice how it's inside the trend lines, right? So once this trend breaks, right? This is a good example too. Like higher high, higher low, higher high, higher low, higher high, higher low, and then it starts to switch in direction, and we go down into like the lower trend, right? Lower low, lower high, lower low, lower high, lower low. So let me show you guys an example, right? 2020, COVID to 2022, 2021, we are on an uptrend, right? We're creating higher lows, higher highs, higher lows, higher highs. Now notice what happens when we break this trend, right? We broke the trend here in January of 2022, and the trend flips, right? So let me cover this. The trend flips, right? Notice how now, notice how I'm gonna draw this trend line. I connect the wicks. So I have 1, 2, notice how I'm touching them, right? 3, 4, cool. So notice how those touches, there's multiple touches off those wicks, right? So this uptrend officially broke in 2021, once we broke below it, right? And now we, instead of making a higher high, because this was the recent high, right? Instead of pushing up and making a higher low to make a higher high, it didn't, right? So that uptrend is over. So now you guys are on a downtrend, right? Notice it was, now this is a high, this is a low, this is a lower high because it's lower than this high. And then we make another low because it's lower than this low. Then we make another high, but it's lower than this high, and so on, right? And then over here, and now look what we're doing. We're breaking out of the uptrend. We broke out, retested, and now we're creating a new trend. So you want to trade with the trend, right? This is a basic technical analysis that you guys need to understand before even getting into trading and starting to, right? You guys want to get an understanding of the direction of the market. You guys want to get an understanding of the economy and everything, right? So I go, yeah, for sure, bro. Likewise. But that is right. That is how you identify trends. Okay. Does anyone have any questions or anything? Anything you guys want me to cover? But that's how you get started. You know, this is the charting platform. Now you guys have your broker you guys can trade on. You know, now you guys want to learn how to chart, right? So yeah, first things first, you guys are gonna want to learn how to read the candlesticks, right? There's most, you guys just Google candlesticks. If you guys DM me on Instagram, I'll send you guys a free book that's really, really good. That my Instagram is _LexTrades. I'll send you guys a free book that helps you guys, you know, get started, get really good understanding of candlesticks and trends and what levels candlesticks work best at. But that is a basic intro to candlesticks, trends. I'll probably do another class. If anyone here already knows how to trade or is a little bit more advanced, I'll go deeper into like more advanced strategies. But I know that if I start talking about like more advanced stuff right now, I'll probably lose some of you guys. So I'll do another webinar for more advanced strategies. Should we memorize bullish, bearish patterns? Yeah. So also, other than candlesticks, you guys are going to want to learn chart patterns, right? These are very, very important to trading as well. These are kind of like the cheat sheet too. I'll give you guys an example of one of my favorite ones. This is the cheat sheet here. Trying to find a good example. This one's all right. You guys could Google this. I just Google chart patterns. I'm going to show you the cheat sheet of all these. I'll give you guys some quick examples right now. But one of my favorite chart patterns is these right here, like the head and shoulders and the inverse head and shoulders. One of my other favorite chart patterns is the bull flags and the bear flags. I'll give you guys an example of a bull flag and a bear flag right now. So I'm trying to find a picture. Let me just type it in. Bull flag. So this is what a bull flag looks like, right? You get a first move up and you get a pullback and then you get a next move up. So so for the brand new traders, look for this chart pattern, okay? And start paper trading it and start back testing it and start looking for it on your charts, okay? I'm gonna show you guys an example on the actual chart right now. So notice how you get a first move up and then you get a pullback and then you get the next move up, right? So this is one of my favorite. These are one of my favorite. And it's the same thing for a bear flag. It's just upside down, right? It's the other way. So it'll look like this, right? Like this one. Bear flag, move down, consolidation, and then another move down. So I'm gonna give you guys an example on the chart real quick, right? For the 5-minute time frame. And this is actually a trade I took yesterday on QQQ where we get a move down and then we get a bear flag here off of a key level, right? Get a bear flag. See a little bit more clearly. And it's like a bear flag. And if I go back over here, remember what this looks like, right? It's a move down. It's like a flag. It's like a flagpole, right? But the bearish one would be to the downside. And then you get another move down. So some of these are really good chart patterns because they give you a good risk to reward as well. So you get a move down, you get a pullback, and then what do we get next? Another move down, right? So those are some of my favorite chart patterns to trade. Same thing goes with bull flags. Let me show you guys a good example of a bull flag here. This is a really good one. And the confluence you would add is that 9 EMA I was talking about right now. So if I add a 9 EMA, notice how the 9 EMA, I could kind of use it as the guiding tool, right? It pulls back to the 9 EMA, and if it stays below it, that bear flag plus a 9 EMA gives me more confidence. If there's a level right there, it gives me even more confidence, which there was this day. Notice how this is a level of support pre-market, right? Gets held up, gets held up, gets held up, and then we break below it. So that level of support turns to what? Resistance, right? So we break below a level and it turns to resistance. You have the 9 EMA, it's a bear flag, multiple confluences for me to take a short position. I could just have a stop loss. Remember, you guys want to have these 3 things before entering a trade, right? A stop loss, an entry, which was here, and my take profit, which is the recent low. The recent low is going to be here because that is the lowest it went the day, right? That day. So if you guys go here to risk to reward ratio, look how it says 3.0. To get that, you guys go here to trading view and it'll show you guys long position, short position. Since this is a short position, which is going short down, I click short position and that's how it popped up and I adjust it, right? I always look for a 2.0. You know, if it's a 3.0 or higher, that's better. But you want a 2-to-1 or a 3-to-1 risk to reward on all your trades, right? Let me show you guys an example of a bullish flag now, right? This is a bull flag right here. Notice how you get a first move up and you get a pullback to that 9 EMA. and it holds up, and you get that next move up, and then we get another bull flag, like we get another move up. When the trend is really, really strong, this is where I like to use it. And you use everything as confluence. Remember what I told you guys earlier in the class. What is my favorite candlestick pattern? The bullish hammer, right? Look at these bullish hammers right here off of the 9 EMA. Because what does a bullish hammer represent? That the buyers are strong. So the buyers, we pull back to the 9 EMA, the buyers show their strength there, and we get that next move up off that bull flag. 9 EMA, trend is strong. We're making higher highs, higher lows. That's the trend, right? And then we get that next push up, right? Same thing with the bear flag. Like the trend starts to reverse. We start breaking back below the 9. It doesn't hold. We had a move down. We had a pullback, starts to flag out, and you get another push down. And then we get another one. Look, get a move down. We get another flag. And you get another move down. And then we get another one. When the trends are really strong, right? I typically like to take the first two. If it's really strong, you take the 3, but after 3, it starts to die down. But look how many flags I just found on this one trading day, right? Really, really good example of how to keep it simple, right? You always want to have stop losses, all right? So if I would have taken calls off this bull flag and it would have went below this, I would have had to get out and accept that I was wrong, move on to the next trade, and continue to find those 2-to-1 risk to reward ratios. Same thing to the downside, right? If it were to go above this, I'd get out, accept that I'm wrong, move on to the next trade. But that is some of the basics. Overall, very, very basic class. So many more strategies. I want to keep doing more of these. Yeah, for real. Yeah, but yeah, I want to do more of these classes. Is using a stop loss, any meaningful and 0 DTE options. What's your strategy to handle losses? So stop loss, and if you're a complete new trader, I highly recommend staying away from 0 days to expiration. You're gonna save yourself a lot of stress. I promise you. You're gonna save yourself a lot of stress with 0 days to expiration contracts. Buy more time on your contract, especially as a new trader. Strategy to handle losses, as long as you can, you have to come in with a game plan, right? If I come in with a game plan and I've stuck to my game plan, and if not even though my game plan looks really, really solid, it can still fail, right? And if my game plan fails, I have to get out where I said I'm gonna get out. I cannot be stubborn and just watch the position go against me, right? As a new trader, it happens sometimes, but you want to avoid that, right? You guys want to avoid that. If you say your stop loss is at a level and you're still a new trader, set a hard stop. Having a mental stop loss requires discipline, right? To stop out where you say you're going to stop out. So set a hard stop where you want to stop out. So that way, if it does go to that price, it'll stop out for you, instead of having to, hold through a position like that. But if, like I said, when I'm looking for setups, I'm looking for a 2-to-1 risk to reward ratio. So as long as I have a 2-to-1 risk to reward ratio, I can lose 5 out of my 10 trades and I'll be okay as long as I hit my 2 reward on the other 5 trades. And if I lose my 1 risk on the other 5 trades, I'm still profiting on the 5 trades that I won compared to the 5 trades that I didn't win, So that's what it comes down to, if you have to set hard stops, do it. Don't let the emotions get to you. That's the psychology part of trading. But yeah, that's how I kind of handle losses on trading. And I always never like to risk more than, so let's say I'm on a $5,000 account, right? I don't want to risk more than 2% of my account. And that's a rule that even like hedge funds use, or like a lot of big traders use that, right? If I'm on a $100,000 account, I don't want to risk more than 2% of my account. $50,000 account, I don't want to risk more than 2% of my account. So if, that way you can be scalable, you want to be scalable. You want to scale up, it takes time, nice, slow and steady, but you eventually stack up the wins, That's how you really, you have to, like, say, for example, if I'm on a 50K account, I don't want to lose $1,000 on or like, that's how you kind of like continue to be scalable. You have to set a specific rule for yourself. Do you keep the rest of the account in cash? Do you keep the rest of the account in cash? You only use 2%? It just depends. Like, let's say I'm on a small account, right? Let's say I'm on a $1,000 account. it's kind of hard to, if you're on a very, very small account, then I mean, I guess it's okay to use a little bit more than 2%. Because if you're using like 2% on a $1,000 account, then that's basically using like what is that? 2% of 1,000 is very, very small. 1,000 times point. So two, it's only using $20, which is very, very hard to do on a small account, you know. The 2% rule is really for bigger accounts, but on smaller accounts, when I was growing a $1,000 account, I would divide my account by 20%. So 20% of 1,000 is $200, right? So I would throw $200 per trade on a $1,000 account and try to hit a 20%, right? I try to hit a 20% on a $200 trade, try to make like $40, probably lose like $20 if it goes against me, and try to keep that balance, right? That's how I would scale up a small account. So with a smaller account, it's okay to go in a little bit because you want to grow the account. It's just more so the bigger accounts you're gonna want to keep us that 2% rule. But it still kind of does apply though. It's a good way to. Can we get a funded account for options also like the same way you said for futures? Not that I know of. Maybe there is some, but not that I personally know of. That would be dope though. I think some are working on it. So when they are, if that ever does come out, I'll definitely let you guys know. That's something I'll definitely do. That'd be game changing. But yeah, that's how, those are a lot of the basics. Is futures the same as Forex? Not really. No. I mean, you could trade some on, it's a little bit, it depends on the asset you're trading, because you're trading commodities. I'm not really trading the US dollar or anything like that, I'm not, but you could trade gold on futures. You could trade wheat, corn, oil. Yeah, Forex is a currency, but I'm trading more so the assets. So if I'm trading futures, I'm trading ES and NQ because, is confluence trading comparing the strength of a stock with an index? For example, Amazon, do I compare with SOXS or a different related ETF? I just don't know which one to compare to. Okay, so this is a great example of relative strength, right? Go back to finviz.com and look what was really, really strong today. Meta, right? Meta and NVIDIA. So Meta was up 3.7% compared to everything else. Right? Look at Apple was only up 0.9%. NVIDIA was really strong too, 3.5%, but Meta was the strongest one. So if I go back to the Meta chart, look what Meta did today. Absolutely just ripped, right? We broke 300. Notice how it was resistance back over here, a hard resistance that it couldn't get above, turned to support today, and it bounced perfectly off of 300 and completely just went up 8 points from there, $9, right? Completely just made a crazy move today. Meta was relatively strong today. If I compare that to SPY and put it side by side, notice how SPY was going down around this time right here, right at 855, and Meta went down too, just not as much as SPY, right? So the fact that Meta held up really strong and pushed back up to highs, the high of day towards the end of day, shows that Meta's a lot relatively stronger. So for example, Amazon, do I compare it to SOXS? I would compare it to SPY or Qs. Not SOXS. This is like the inverse. But yeah, I'd compare it. SPY owns a lot of Amazon. So if I go side by side, SPY, and I go over here and I type in Amazon, you can look at them side by side, and you guys will see that, around the same time that SPY bounced here at 8:55 a.m. Amazon bounced around that same time again, around that 8:55 a.m. And they made a similar move, right? So that's how I compare it side by side. There's going to be days where SPY could be coming down. Or for example, today CRM was strong today, I believe. CRM is relatively strong compared to everything else. Look how it's been going up for the past 2 days. Today, completely, we broke this 222 resistance, turned into support, and completely just broke up, right? This is really, really strong. Because notice how CRM is going up around this time. SPY is going down around this time. this is relative strength. This is kind of like where the money is flowing to. That's why I like to look at Finviz, because it'll show me where the relative strength names are. And I would want to pay attention to where the money's flowing so I could, catch the trend up. When stocks are trending, that is when I make the most money. And those are the trades I like to catch. If that answered the question. But yeah, it's if you guys have any other questions, I think that's pretty much it for today's class. I'll just see that you guys started. I appreciate everyone who joined. I hope you guys getting some value off of it. If you guys have any other questions, you guys feel free to DM me. I answer all my DMs. Yeah, of course. But all right, guys, that's pretty much it for today's class. You guys have a good day.